good today. You didn't see me hardly bouncing around at all. I did really good today. I'll take my pat on the back now, Miss Dion. Thank
Right. I was over here. I came on and I'm like, look a little frozen. I'm like, uh-oh. I'm like
you.
I'm moving now. I don't see anything. But
Right. Like, what's going on here?
right.
Okay. You know
Uh,
what today is?
right. Today is Let's Prepare Your Taxes. And we are here on Water Cooler Wednesday. Yes, 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 yes. We're here. Right. We're here to talk about all the things, taxes for this year, because as you get ready to prepare to purchase or sell your home, we might have some important information that you might need to know about.
We just might.
All right. So my name is Dione Branch with EXP Realty, and my team name is Allure Dream Homes. And I am so happy that you are with us today. And we have with us our co-host.
I want to see if you can point to me.
No, I stopped pointing a long time ago.
Oh, okay. I thought maybe you got it together now. This is Lisa J. White, the House Money Mom. You got it.
Right.
House Money Mom is here. I'm with Nexa Mortgage, where brokers are better. And we are super excited to be here on tonight to talk about taxes.
Yes. Yes. So if you're here, you can actually put in the comments in the chat below. You can say hello to us. We'd like to know who you are and where you're from. So we're excited to have you as a guest today on our show. So out there viewing all this important information.
Yes. Actually, you know what? If you don't mind, I would like to start today because I do have some things that I'm burning to talk about because I've been doing much more of it over the past tax year, 2024.
Mm-hmm.
Changes were made in my company so that it allowed us to be a little bit more flexible with how we do things. So, one of the things is that I talk about with customers is being able to make tax deductions. So, like when you file, if you itemize, there's certain things that you can deduct. Well, discount points is one of those things. And
Okay.
the way that I usually do our loans is we usually try to add in a discount point. Not that it's an extra charge, but it allows our fees to kind of all be encompassed into one thing. And so we put the discount point in there, which allows you to actually have a tax deduction when you go and file your taxes for if you itemize. Another thing would actually be the mortgage interest deduction. So that is kind of a big perk. A lot of people, are concerned about how they'll be able to utilize their home when they file taxes. So the
Mm-hmm.
mortgage interest deduction, if you do have a mortgage on your home, you can deduct the interest that you paid during the year from your taxable income. So like for 2025, what am I reading here? It says the cap for this deduction remains on loans up to $750,000 for each. So even for people that are paying mortgage interest on, the higher end homes, they can still actually deduct that interest as well as the discount points if they just recently bought the home. And then I don't know if people are aware of this or not, but if you bought your home, like say for example, a few years ago, it kind of dates back to when they had that old cap of $1 million, you actually can still qualify for the higher deduction if your mortgage, was done back in that time when they was.
Oh, okay. All
Yeah, isn't
right.
that
Yeah,
neat?
yeah, yeah. So that's what, and these are the benefits when people are like, why should I buy?
Right.
Right? Why
Yeah.
should I buy? We always telling people it's important, it's a good thing to purchase a home because you can actually write your home off instead of the landlord writing it off.
Mhm. Right, because they have a way that they're able to do deductions too when they own a home that's an investment property. Another thing that people may not necessarily think about is, and I know property taxes have gone up a lot, especially in Crook County.
Yes.
But you can actually deduct that too. State and local property taxes, those are deductible. I think the limit is like $10,000, but this is something that can actually reduce your tax bill. So if you're itemizing, then you can go ahead and use in any of those three or all of them. If you got all of them, then you can use all of those as deductions on your income tax return. Now, there was
Okay.
one other thing that I saw that's like a credit. I don't know a whole lot about it, but I have seen this coming about a lot when people have energy efficient improvements. Like, for example, installing solar panels, something like that. You can actually get federal tax credits for that. So
Yeah. Yes.
yeah, they said in 2025 the tax credit for solar panel installation is at 30% of total cost. So that's, applying to the panels themselves, but I'm sorry, not only to the panels themselves, but also to installation costs. So it's a combination. So that's pretty cool that you can deduct some of those things. And who don't want to decrease their tax liability?
Right. Exactly.
Yes.
All right. Well, so we've talked about, when you have the house, but when you want to sell the house, there's tax considerations as well. So it's called capital gain,
Yep.
right? So let's say, for instance, you're selling your home, and a lot of people worry about, well, am I going to be taxed when I sell my home, and how am I going to be taxed?
Hmm.
So this is always a concern as well. So when with capital gain, basically they're looking at the price of your home, the amount that you purchased your home for. So let's say, for instance, you purchased your home at 400 at 250,000, and
Hmm.
then you were able to actually sell your home 10 years later at 400,000. That leaves you with a capital gain of about $150,000. And
Okay.
so um a lot of people are concerned, like, well, are they going to tax me? Well, the good thing about this
Yeah.
is, if you're a single person filing single, then you will get a credit of 250,000. So you've got this capital gain of 150,000, then they actually will not tax you for that 150,000. And
Yeah,
the
that's
same.
true. Yep. Because you can
Yep.
do it up to 250,000. Uh-huh. That makes
Mhm.
sense.
Right. So for as a single person, but if you're married, if you're filing jointly, you actually have up to 500,000.
Yes, I did really make that face.
So, so this is definitely a good thing. And when you're worried about selling your house, you can actually not worry too much about it, because you have the capital gain exemption, and it will cover the price of your home now. So, all right.
So then you can use all of that money to go toward the purchase of your new home.
Exactly.
Or you could do a combination. You use some of it to go towards your down payment to keep your mortgage a little bit lower, and then have money in the bank maybe to do other things, invest and things like that. Really make your money grow.
Okay. Yeah.
Yeah.
They do talk about cost basis adjustment as well, and they're saying that one way to reduce your taxable gain is by adjusting your cost basis, and this
Mm.
includes expenses like a renovation or the home improvements, like adding a deck, remodeling the kitchen, and replacing the roof. So these are some of the things you should make sure that you talk to your tax person about when you're filing your taxes. That there's definitely some credits that you can get when you own a home, and
Yeah.
even sell it. So
Yep, absolutely. Make sure you keep your receipts though, because
yes,
sometimes you never know when Uncle Sam may want you to prove it. So
yeah.
it's always better to have things in writing. Um, and so, again, that's for people who are homeowners or selling, getting ready to do something different. But we probably should kind of piggyback a little bit on, because one of the things I know a lot of people think about is when they first buy. What are the things that are kind of in the way for them when they're getting ready to buy a home? So if they're a first time buyer, then there can be different incentives that might be able to help them. Down payment assistance programs are not, they're few and far between now. It used to be back in the day. I remember we had the I think it was called the Nehemiah grant. There was a federal level grant. You didn't have to pay it back. It wasn't a lot of hoopla to get it. If you were in the right income bracket, you would qualify for it. We don't have a lot of stuff like that anymore. We do still have some programs, but they're not as attractive, let's just say, as
Mhm.
what they used to be. So, but one of the things they do still have would be like state and federal type incentives. Like, for example, if you're a first time buyer, I have seen the tax credit programs. For example, they have the MCC, or the mortgage credit certificate. So now what that does, it gives the person who on the loan
Mhm.
a dollar for dollar tax credit. So it lowers your tax liability. So for example, if you have a mortgage credit certificate and it's calculated at 20%, and then your loan amount is 200,000, your interest rate is 5%. So they would multiply 200,000 times 0.05, for the 5%, which gives you $10,000. Then they take that $10,000 and they multiply that by the 20%, which gives you an annual tax credit of $2,000. So now that means that you can lessen your federal tax liability by $2,000. So
Okay.
that's something that you can, and you don't have to do anything really special to qualify for it. You do have to be a first time buyer, obviously. And then they do have like some specific income limits that are, they're adjusted for household size in your county and stuff like that. It's a few things that go into, being eligible, but it's not really a ton of stuff that you have to do in order to be able to qualify. Most people can qualify for a mortgage credit certificate. Go ahead. You got that look in your face like you want to say something.
Oh no, I didn't. I'm just listening.
Oh, okay.
I'm over here learning too. You know.
Okay. Okay. That's your I'm learning face.
Yes.
Okay. So another thing, because again, this is a conversation that I often have on a day-to-day basis with potential home buyers. Well, what are my options as far as a down payment? So a lot of people don't really think about that your IRA, your individual retirement account, that can be used as, because their retirement accounts like 401k and things like that, they allow, I know for 401k, they definitely will allow a hardship withdrawal, we call it. And that's something that you can use without being penalized for taking the money out. And one of the hardship withdrawal exceptions would be if you're buying a primary residence. You don't have to
Mhm.
be a first time buyer for it, but just if you're going to live in the house that you plan to buy, then you can do a hardship withdrawal from your 401k. From your IRA, you can, if you're buying your first home, you can actually withdraw up to $10,000 from a traditional IRA or a Roth IRA. You won't get that 10% early withdrawal penalty because of the fact that you are buying it for a house, again, that you're planning on living in, and you're a first time buyer. So you on that one, though, unfortunately, you will still owe income tax on however much you withdraw, but you don't get the penalty that you normally would get for taking the money out early. So another thing, go ahead,
For
I'm
the
sorry.
401k, was there a limit on the 401k? I know for the IRA you said 10,000. I was just kind
Right,
of
for the 401k, I don't think they had a limit. I don't recall seeing it in any paperwork before, because I normally look at the paperwork that they have that describes the terms and conditions of the withdrawal. I don't
yeah.
recall seeing a specific dollar amount that you were
Oh,
limited to for your 401k.
oh,
Normally, the 401k limitations would just be as far as how much you have to leave in the account. Like, your
mhm.
max, I think, is it 60%? I think you take out up to 60% of your 401k. You have to leave at least 40% in there.
Okay.
So it's
Okay.
really more like a percentage, but not an actual dollar amount.
Okay.
And speaking of down payments, a good question for this time of year would be, what plans do you have for the tax refund that you expect to get this year? Have you thought about using that as part of your down payment for your new home, or a way to get a lower interest rate? Because that's
Right,
another
right.
thing people don't think about. We're complaining about the rates, but there's something called a rate buy down. So if you have, a couple $1,000, maybe take it from your refund, or from your IRA, your retirement account, or whatever. Now that's something that you can use to lower your interest rate. So maybe instead of your interest rate being a 7, maybe you buy it down to a 6.5 or a 6.
Mhm.
So that's something to definitely think about. And then, for a lot of people, just the down payment or the cash at close, that's the big thing that stops a lot of people. That's what makes the people go, can I really do this? Because they can afford the monthly payment, just like how they're affording their rent payment right now. They can afford their monthly payment, but when they think about, coming up with 10,000, 15,000,
Right.
or
How do I
sometimes
get the
more.
money to close? Right.
Right, right.
Hmm.
Sometimes that's the issue, but this is something that could be a very good solution that, it doesn't put you out. you know, this is something that you're going to get that money anyway. Now we just allocating it for something that's going to be, obviously much more beneficial to you in your living, because this will upgrade you from renting to buying, and it also is going to give you, like we just talked about, these different options for being able to make your home kind of work for you. So, you know, you might not think that you can afford it, and you've been looking for an answer, but here it is. We got you.
Yeah. Yeah. Definitely an option. When people, a lot of times, people are trying to figure out, how do I have this down? How can I pay the money for the down payment? I really want a house, but I just don't
Yeah.
have it. And I think we get a lot of clients like that
Yep.
come to us that are, so we, a lot of times we talk about the different grant programs, but during this time you're filing your taxes, or there's a lot of different other options that you can use in order um to actually have your down payment. So
And to be real honest with you, Dion, a lot of these programs, you use the word grant. So I want to make a slight correction on that, because a lot of times they really are not grants. They
mhm.
really are, they're down payment assistance programs, but they really don't function like a grant would. So I have, I think, two, no, one now. I have one, I think, that actually is a grant, which means they provide the money for you at closing, and there is no further obligation. You don't get a second mortgage on your home. You don't have to pay something back if you sell your house or refinance your house within a certain amount of time. None of that. It's literally just granted at closing, and that's it. But
Okay.
most of these quote unquote down payment assistance programs, they don't operate like that. They don't really. That's why I was saying, like, the Nehemiah that they used to have from the federal government back in the day, that
Yeah.
was a grant. That was something where they gave you the money at closing, and that was it. You didn't hear nothing else from them. But
Mhm.
now a lot of these programs, they don't function that way. They function more like a second mortgage. They're usually going to be a second mortgage on your house, and it's on there for a certain amount of time. And also with that certain amount of time, either there's a secondary payment that goes along with it, or if there isn't, then it's what they call a 0% interest forgivable loan, but it's not forgiven all at one time. It's a prorated forgiveness over, like, usually 5, 10, or I've seen them even up to 30 years. So if you
30 years?
still, I have. I've seen them all the way up to 30 years. Yes. So even if you think about refinancing, like, say market changes and you want to refinance your house because now you can get a much more desirable rate. Well, you can still do it, but your principal that needs to be paid off is now going to include whatever part of that, down payment assistance that has not yet been forgiven.
Yeah, okay.
Yeah.
Okay.
So that's something to think about. If you can, what was that song from, I think it's from Porgy and Bess, God bless the child that's got his own. If you have a way to just do it yourself, then go ahead and do
That's,
that instead. Just do it yourself. If it's not going to hurt you, to use that money to this. And I look at it also as just a way of investing in yourself. It's it might be a pride thing, but it's when you can invest in yourself. Say, I took this money and I put it into something that I wanted for me, something that would benefit me, something that will help me, something that will grow me, something that will take me
mhm.
to a different level, provide something in my life that I haven't had before. Because that's usually what people are looking for when they're looking to own a home. They're looking to be on a different level. They're looking maybe for some kind of peace and solitude. Maybe they're looking for, getting away from those neighbors who they're hearing them bang up against the wall, and their kids up at
Walking
5 o'clock
over
in the morning
them.
looking for food. Right. All of that,
All
they're
that.
looking to get away from all of that. And if you can do that on your own, then that's a different kind of pride. When people talk about the pride of home ownership, that's a whole different level of pride that you did it.
Mhm. Mhm. I agree. I agree.
Can I get an amen? So what about the people who are investing in real estate? Because I know we were right now we've been doing a lot of talk about like primary occupants and people who are going to buy the house and they're going to live in it. So what about people who are investing in real estate?
You asking me? That's you.
Yeah, that's you.
Not me.
Because I'm showing that rental income is fully taxable. But as the landlord, you can offset, because that's a business. They look at that as a business, right? But as
Yeah,
a
okay,
landlord,
yeah.
you can have deductions, right?
Mm-hmm.
So expenses like repairs, I guess probably improvements. Oh,
Right.
property management fees. Like if you use a property management company.
Mm-hmm. Well, a lot of times, with investment property, you probably have different costs where furnace, you because you kind of get a little bit more wear and tear on your property when you have tenants compared to when you're living in your
Yeah,
own home because they don't sometimes they don't take care of it as well as you would take care of your own.
right.
Plus the time when people are moving out of their house, out of their unit, and you're giving them you have to refresh the paint, you might have to change appliances out, things like that. So a lot of these things are definitely deductible, tax deductibles that you can use. And so you always should definitely keep your receipts, as we said before. Keep those receipts because
Right. We can't
when you
say that
go
enough.
right. When you go, they always want to see, okay, let me see an itemize of what are the things that you've actually purchased or improvements you've done on the building. Right.
So I don't know. I think it would probably be good to have an actual tax professional to come on and maybe talk about this stuff in more detail. But yeah, because
Mm-hmm.
who I'm not even sure if they're required. Like your tax preparer might be required now because I remember some years ago they really tightened up and tried to make tax preparers responsible for kind of what was going on to the, because they had a lot of fraud. So I think they were trying to make the tax preparers more responsible for what information went into the tax return. So they
Uh-huh.
were, having the taxpayer sign forms and, bring in evidence of identification and documents and things like that. So that might even be something that when you get ready to go and see your tax professional, you don't want to just have it available, but take it with you,
Yeah.
because they may be asking to, look at it and see it.
Yeah. Especially I know my tax preparer did actually a couple of people were audited because of some of his practices. So you have to make sure that
What?
yes. It was kind of a sad day. We were not, thank goodness. But
Okay.
um yeah, especially during that time. So yeah. So
Yeah.
make sure that's what I would say. Make sure you have your receipts and everything because a lot of things are placed on your taxes and your tax reports, and those is definitely important for you to have that proof because you could definitely have an audit at some point
Yeah.
too. So,
And you want to make sure that the deductions that you claim are valid, and
hmm
you can prove it. That's actually one of the mistakes that people make is they try to claim deductions without the proper documentation. So
yeah, yeah,
if you're
yeah,
deducting home office expenses or improvements or something like that, then you need to make sure you have receipts, you have bank statements, proof of payment, invoices, what, probably maybe even pictures,
yes,
this
yeah.
what it looked like before and this what it looked like now.
Right. It's important to have all that information. And then, they also say don't forget to check with the state. specific rules. And so
Mhm.
that's why, depending on if you're doing a small tax return, just so you're single, don't have much to write off or anything like that, a lot of times it's okay to do those taxes by yourself. But when you
Mhm.
start to invest in property and having a home of your own, as well as if you're doing investment property, it's good to look to seek out professional help.
Oh,
And
absolutely.
right, and depending as your net value grows, you might not want to do the little H&R blocks and stuff, because those are people who are just trained for the season, but you might want to use the certified public accounting, right? So
Mhm.
CPA. So, but not knocking the little guy, but just so that would be my suggestion. So don't
Yeah,
make the mistake of not seeking out professional help.
absolutely. Yep.
Mhm.
So I think we covered a lot today.
Yes, we did. Yes, we did. And so, you know, this wraps up today's episode, right? Of Water Cooler Wednesday. And we just want to say, remember, real estate taxes can be complex. What we've talked a lot about taxes today. And it's how, so we're not the professionals, but we definitely know that there's people out there that can help you.
Yeah.
And but the taxes, they're manageable, right? There's definitely a way. Don't be afraid of them. I think a lot of people are afraid of taxes, filing
Mhm.
their taxes too. But don't be afraid. Reach out to professionals for help. Once you get additional money and you need some help in thinking of what you want to do with that money, maybe consider buying a house instead of buying, some clothes and things like that. Save your money as well, right? So then
Yep.
when you use that as the beginning of your savings for a home, depending on how much you might need. But always just reach out to us. Let us
Yep.
know. We're here to help you, serve you. And if you have any questions about topics we've covered, drop them in the comments, right? Just drop a question in, and we'll make sure that we follow up with you and answer the question or refer you to a professional that can help you with those questions as
Yes,
well.
because we are not tax professionals. We are real estate professionals. She is a real estate broker. I am a mortgage broker.
Right. Yeah. So we,
So
so we
we
just
won't be
want to
doing
give
your
you the
taxes, and none of this should be misconstrued as tax advice.
exactly, exactly. So, and do us a favor. Don't forget to like and subscribe, because we
Yes.
definitely love you to be added on as notification of when a new episode is coming out.
Thank
So
you.
my name is Dione Branch, and I am with Allure Dream Homes, and my number is below. So if you ever have any questions about purchasing a home, please just let me know. And this is Lisa White, and she's with Nexa Mortgage, and she's the first stop before we go out and see a home. Yes. You might
Right.
call me, but I'm always just gonna send you to her, right? So we
Yes.
get you pre-approved, and then once we get the pre-approval going, then we're able to go out and view different homes. So it's very important to start with the lender first. All
It
right.
was a good episode. I thought that was good. Very well done. That was a lot of good information. I didn't realize how much good information we had, but we had a
Yeah.
lot of good information.
There's definitely a lot to cover on taxes for sure. And
For
you ever
sure.
need to book a meeting with a call with us, you can also just add to our calendar and book a meeting. So we're here for you.
Thank you so much, everybody, for coming out tonight. We'll see you next week.
Thank you.